All right, so WallStreetBets. Pretty much everybody should know about it. Everybody should know about the GameStop and what's going on. I don't think at this stage, I don't think there is a person that doesn't know what's going on. So just a couple things I wanted to talk about. Unfortunately, I hopped on this late. I had a lot of what I wanted to talk about, but just didn't sit down to record a video. So there's a lot of things that have gone on. See if I can summarize. So basically, if you guys don't know who of you don't know, but if there's someone here that doesn't, basically Wall Street is going through a bit of a crisis right now. Investors on the subreddit WallStreetBets saw that Citadel, and I forgot the previous name, the name of the previous short seller, Melvin Capital. That's what it was. I had to go and check here. So Melvin Capital, people saw that Melvin Capital was shorting the stock on GameStop. If you don't know what that is, basically they are betting that the stock price will go down based off of the financial situation of the company. Just betting against the company and betting that the company will fail, and thus resulting in start failing even more, thus resulting in stock prices lowering. So basically, when you short a stock, you are borrowing on the current price of the stock, and then you are going to sell that stock back at a later date to, whenever the price goes down. So basically, if the price is at $10, you borrow the stock, you sell it, and then you borrow the stock, you buy it at $10, you wait, sell it at $2, you make an $8 profit. You pay the individuals who you bought it from the new price of the stock, which would be $2. You get to keep the $8. Essentially, that's the basis of shorting a stock, from my understanding. There's a lot that I'm learning too. I actually did want to invest in stock market and go into cryptos and stuff. So this is a good entry into that. Be that as it may, the people on WallStreetBets found out that Melvin Capital was shorting. They were shorting GameStop by about 140% or so. Basically, what that means is that there was only a certain amount of stock that is out for people to buy. I think it was like 69,000 or something along those lines. Those shares in stock. They were shorting more stock than what was available. They were like 72 million. I can't remember the exact number, but they were shorting over the amount, basically borrowing more stock than was actually available, driving the price down trying to drive the price down of GameStop. I'm going to get tongue tied quite a bit doing this. They were trying to drive down the price to then sell the stock back at the lower price that it would be at. Now, a couple things happened in GameStop's favor. People saw that, started buying the stock over a course of, I think, a month, 2 months. They were buying this stock. GameStop then announced a new CEO and a couple other changes in the way they've structured their business, focusing more on e-commerce and things of that nature. Just trying to actually do what they should have done well before, which is shift their business model to a more current business model and not be stuck in the early 2000s. All right. So with those things happening and the people buying up the stock over a course of a while, and another thing, the GameStop, the price, the actual stock should have been valued at about, I think they said $15 to $16, but it was actually at the time valued at like 10 or something along those lines. So it was actually an undervalued stock. So basically what happened is through those announcements of the new business model and the direction they want to take the company, mixed with the people buying up the stock shoots up, which causes a lot of people to lose money, particularly Melvin Capital, who you see here, what I got here. Melvin Capital eventually gets bought bought out by, well, not bought out, but they had to get investments from other bigger hedge funds. Citadel was one of them, and Point72, who were the two that put in about $2.75 billion. And the reason they had to put this is because when the stock price goes up, when you short a stock and it goes over the amount you bought it from, now you have to sell whenever that may be. You have to essentially sell at that current price. So you borrowed at 10, but now the price is at 15, the price is at 22, you have to pay that current price. So you can see how quickly, when you've shorted more shares than is available on top of that, you can see how quickly that will add up, especially when the stock shoots up to what was its, I think, peak at 480, 460. You can see a share when you bought in at $10. You know, that's about $450 you got to pay per stock you shorted, per share you shorted. So they needed a cash infusion. They got the cash infusion. They blew through that cash infusion, doubled down, and even shorted even more. And then Melvin Capital's not looking good. So people are going after like Citadel and Point72 and so on and so forth. What was interesting during this whole thing was, as this is going on, you see CNBC, all your mainstream, you know, your normal sources of regurgitated garbage news start attacking the WallStreetBets people. I have one example. I have a couple examples. The biggest one being this one from the Financial Times, where in the article they dismissed them as Reddit bros, some of who alt-right supporters, as dumb money and their frenzy buying as a Ponzi scheme. So they've dismissed them. They're calling them Reddit bros and saying, well, it's easy to dismiss them as Reddit bros, that they're alt-right supporters and they're going through a frenzied Ponzi scheme. So the whole point of this WallStreetBets was trying to get them to call the stock and to actually have to sell off what they have and eventually go bankrupt, the Melvin Capital and Citadel and so on and so forth. So that's just one example. I got more. These individuals who went on trying to, someone's dressed like a cow. I've seen her before. Apparently she's on NBC a lot. I can't put where I've seen her before, but she essentially was one of the people that were saying, like, you know, it's bad people, so on and so forth. Wall Street News, boop, boop, boop. The Financial Times redacted the alt-right slur. What you're seeing is an archive. This is why Archive of Today is important. If you guys see news articles that are bullshit, so we can keep tabs on if people decide to fix or redact, we can always keep and say, hey, this is what they said previous. They redacted and basically put that they clarified the server on WallStreetBets message board had reported to be banned by chat app Discord for hate speech and glorifying. This article was changed and removed for the speculative reference to the U.S. alt-right. And to clarify, yeah, they were. And that's another thing. So their Discord server, WallStreetBets, again, during this time, all this time that's going on, a couple of days of the GameStop stock shooting up, AMC, BB, BlackBerry, which got stock in both of those, Nokia, so on and so forth. Discord then bans them and says it was for hate speech. But then Discord also says, see if I can find it. It might not be here. Yeah, there it is. The server has been on a trust and safety team's radar for some time due to occasional content that violates the community guidelines, including hate speech, glorifying violence, and the spreading of misinformation. So they're saying, Discord was saying that they had been in the radar for a couple months. They had broke community guidelines. There were posts and things of that nature, discussions in that server that went against community guidelines, but they had not taken it down until the WallStreetBets subreddit took off in regards to the GameStop stock going up. So they waited until this became big press coverage. The hedge funds were going around, going to MSNBC and ABC, CNN, so on and so forth, and was trying to smear these individuals in the subreddit. All right. You also had, they tried to lump in Telegram. That's another, did not mean to click that. That's another thing that I also talked about in a video where they were going after Telegram and said, in terms of the two encrypted messaging services, in terms of Signal and Telegram, they were going after Telegram. So you see again here where there's like, I can report from Telegram channels that Nazis appear to be trading GameStop and AMC as well. Essentially trying to lump in Nazis and things of that nature with the WallStreetBets individuals. And then what is your sense of the overlap between the WallStreetBets people and the Nazis on Telegram and elsewhere that stormed the Capitol? Bloomberg, stock market insurrection continues. Stock market insurrection. They're equating, they're sitting here trying to equate the stock market, what people were doing, finding a shorted company that a hedge fund company shorting a company below its actual market value, what it should be evaluated at, and then shorting it 140% over the available stock. They're equating that to people going into the Capitol and having insurrection, which that in itself is bullshit. Insurrection, my ass. Half of those people didn't even know what the fuck they were doing. No one even went in there. It was like nobody going in there with weapons and stuff. No plan, no organization, whatever. You see this? I actually have this one here. Wall Street bankers and elites are so mad to the point they're virtually calling ordinary people incels for simply doing what they do on a daily basis. This person said it's about sex, specifically young men not having sex. Sex leads to relationship obligations. Don't get into fights. We need you. Don't gamble your paycheck. We need to save our house. Basically, because these are incels, people that are not in relationships, things of that nature, they're able to take this money because they don't have the financial responsibility of a family and throw it out. Now, mainly, most of the people on WallStreetBets, if you go on WallStreetBets, and especially during this time, I see if I can insert some of the stuff I found. They were saying that they were pissed off at the hedge funds because a lot of these hedge funds were the same ones that caused the 2008 crash and the 2008 bubble with their actions, with their market manipulation. Their actions directly led to that crash. And then them getting bailouts when people, their families and people they loved lost their homes, lost their jobs, etc. So now it gets good. So then Robinhood and several other companies, I think Webull did, TD Ameritrade, also they stopped the selling of the stock. So as they're stopping the selling, the buying, sorry, not the selling, they're stopping the buying of the stock. They halted the trades on these platforms. They then the next day say, well, you can sell. We're going to stop the trades, but you can sell. No, it was the same day actually. And it was like, you can sell. Essentially trying to get people to sell the stock to drive the stock price down. But the WallStreetBets people, they held. They did not sell. They did not sell. All right. Robinhood CEO then goes on to is getting interviewed by all these individuals because afterwards, Robinhood got the most flack because their company markets themselves as the people trading and bringing accessibility to the market to the individual. Right? They're one of the biggest to do this. It's a free service. What we found out and what people started saying, well, how can they pay for their company and things of that nature if the service is free? That's because the individual is not the customer. They gather your data as you are selling, and they view the trades and things that you're making and sell those to the same hedge funds and Wall Street people. So the Wall Street people and essentially the elite, the financial elite on Wall Street, can make decisions based off of your buying and selling habits. Now, so then people are like, well, why did you stop the stock? They find out that there's some ties between Citadel and Robinhood, and people are trying to figure out, what's going on here. So this is on CNBC. Listen to this.
My question about that then raises all sorts of new questions about whether there's a systemic issue underneath the system and underneath the company unto itself.
No, there was no liquidity problem. And to be clear, this was done preemptively. So we did this proactively, and thousands of other securities remain tradable on the platform. Customers that held these positions were able to sell them. And we're doing what we can to allow buying and to remove these restrictions.
All right, I don't know if you caught that. So he basically says there seems to have been a liquidity problem. Because I also found out that how a lot of this works is they have clearers, these brokers. The clearers hold the money. That's how they facilitate the trades. And the brokers have to send money to the clearers to be able to hold the money given to purchase the stock. They hold that for 2 business days while the stock and the trade goes in. All right. So Robinhood has to put up the money to be able to facilitate the trade with their clearers. So the guy asks, hey, this seems like it's a liquidity problem. Like you didn't have the capital to be able to facilitate the trade. So you halted the trades. So you halted the buying of the trade. So you could get the cash flow because they got a cash injection. They got a cash injection from their investors. They raised $1 billion. So you got that going on. Get rid of that. You got that going on. So people are like, obviously there's some capital issue that you're having and why you can't do the trade. But then he says, no, that's not the issue. We just were trying to make sure that, we did this to protect you. We did it preemptively to protect you. And then he goes on to say this is a difficult decision.
Ultimately, the team made the correct decision here. So what we can do is move forward, focus on giving customers the most stable and reliable platform going forward.
There's enough of that. So where are we at now? You start seeing other things like this. This is the 28th. So this is the 29th. This is the next day. You start seeing the SEC get involved. And the SEC says, in addition, we will act to protect retail investors when the facts demonstrate abusive or manipulative trading activity that is prohibited by the federal security laws. They're not talking about the hedge funders who have been manipulating the market since the damn market's been a thing. They're talking about the retail trader, the me and you, the little person that's out here, investing in the stock market, making some investments, things of that nature. Listen to this.
Retail investors when the facts demonstrate abusive or manipulative trading activity that is prohibited by the federal securities laws. Let's discuss with Jacob Frankel, former SEC Division of Enforcement Senior Counsel and partner at the law firm Dixon Wright. Thanks for being with us this morning. Can that case be made? That statement we just read from the SEC, can that be made here?
Well, the answer to whether it can be made is really going to be driven by the evidence. And that is, you're talking about what role the brokerage firms were playing in this process in terms of limiting the ability of individuals to trade. I actually tend to believe that was proper. And the reason that was proper was because we're forgetting that brokerage firm customers sign customer agreements, and those customer agreements enable the firms to do what is necessary in terms of ensuring customer protection, but also what is in the best interest of the broader customer base at the firms. But more broadly, in terms of investor protection, we're also talking about what could come at the end of an enforcement investigation. And we really don't know what that actually means or will lead to. We know there will be an investigation, on all sides. But the question is social media being used for discussion of issues, or is it being used for the purpose of propping up the price of stocks or depressing the price of stocks? The latter could well be stock manipulation. So I think there's a long way to go. My view.
Hear that? The latter may be stock manipulation if social media is being used to pass along information or suppress and pump up stocks to be able so people could go and buy them at these elevated prices. They're not concerned about Wall Street doing it. They're concerned about the individual. Elizabeth Warren then goes and says that these individuals have been doing this for a while. This needs to be looked into, blah, blah, blah. Every time I want to sit down and record, people start calling me, whatever. Anyway, like I was saying, all right. So Elizabeth Warren puts out her statement. She says that the SEC is investigating. All right. She says that it's long past time the Security Commission does their job and other regulators step up and do their job. Right. OK. You keep seeing at the same time, we will act to protect retail investors when the facts demonstrate abusive or manipulative trading activity prohibited by the federal security laws. They're gonna limit how you trade and your access to the market. Because again, remember, no one cared when it was just Wall Street doing this. They cared afterwards. The commission is working closely with our regulatory partners, both across the government and FNRA and other self-regulatory organizations, including the stock exchanges, to ensure that regulated entities uphold their obligations and protect investors and to identify and pursue potential wrongdoings. They're talking about limiting your ability to go on some like a site like WallStreetBets and freely communicate what trades you think you're going to trade and do, why you're doing it, and so on and so forth, and to talk to people. This isn't insider trading. This isn't you having information or putting out information that isn't already regularly available. This isn't like, this is the same as those people that are on like MSNBC Finance or whatever, those shows, and they would sit there and those stock people will tell you, hey, buy this, buy that, because I think the price is going to go up. I think this company is going to do well. Put your money in this, put your money in that. That's essentially what's going on here. They're doing their research of publicly available information. SEC pledges to clamp down on brokerage that may have unduly limited customers and ability to trade like it comes. They're going to word this in a way to make it seem as though they're going to protect you, because like I said, everywhere it says we're going to protect you. Even this guy here.
We mentioned that SEC statement a moment ago, reading it a bit more in full here. Extreme stock price volatility.
The dude that they're going to go to is even concerned.
To rapid and severe losses and undermine market confidence. They go on to say, David, issuers must ensure compliance with federal securities laws. We will act to protect investors when facts demonstrate abusive or manipulative trading activity that is prohibited by law.
Yeah, I wonder who that ends up protecting in some way. If that's a reference to Robinhood, I don't really know. The best way to protect is to make sure your firm stays in business. It'll be interesting. Again, we come back to this, and obviously the SEC right now is missing its leadership position.
So even he's concerned. Now, he's taking it from the standpoint of the firms and things like that. But I'm telling you, they're going to try to limit your ability to trade on the market and to do this ever again. Elizabeth Warren.
So talk us through what you meant by the content of that tweet. What do you think has been wrong in the actions of the last week or two, and what do regulators need to do to stop it?
So look, the first part of this is we all see what's happening with GameStop. There are rich people on both sides of this, people who are trying, it appears, to manipulate this market. And that's what we don't know the details of. For a long time now, the SEC has pulled back and not made sure that we have an honest market. The whole point of having a stock market is so that people across this.
Let's go back. Listen to what she's saying. There's rich people on both sides manipulating this.
The SEC has pulled back and not made sure that we have an honest market. The whole point of having a stock market is so that people across this country, around the world, can invest in businesses, help create that capital accumulation so businesses have the money they need to grow and to prosper. Instead, what has happened is it's turned into a casino, so that market manipulators come in and they drive markets up or down and make a profit on it. It's called the gamification of the market. And all of a sudden, the billionaires and some hedge funds are yelling because they're not the only ones who make money when the manipulation works. But remember the other half of this. There are going to be a lot of people who are going to lose money around this, a lot of money that they can't afford to lose. This is why we need an SEC that has clear rules about market manipulation and then has the backbone to go in and enforce those rules.
People are also going to lose money. Regular people are also going to lose money. So again, rich people on both sides of this.
There are rich people on both sides of this who make money when the manipulation works. But remember the other half of this.
And then remember the other half.
There are going to be a lot of people who are going to lose money around this, a lot of money that they can't afford to lose. This is why we need an SEC.
Because it's all about, you're not smart enough to make your own decisions. You want to dump a second mortgage into this shit, then obviously you're too stupid. You're just a retailer. Mind you, during this whole thing, I also saw them saying that the unsophisticated, they were calling retail investors the unsophisticated investor. They need to be protected. They don't know exactly what they're doing. All right. So you already got rich people on both sides manipulating this. And what about the people that are going to lose their money? Most of the people, majority of the people, especially if you go on WallStreetBets, you see the people there, they know exactly what they're doing. They don't give a shit if they lose money at this point. You know, they put in whatever they said they don't want to, they're going to put in their rent money, YOLO. Hey, man, if that's what you want to do, that's what you can do. I wouldn't do it. But hey, if that's your money, you feel comfortable doing it, I can't tell you nothing. But that's the ability of a free market. The ability of the free market should be to allow somebody to freely invest, freely trade, whatever they want to, even if that means that they're going to take a loss. Or if they know they're going to take a loss or might take a loss.
That has clear rules about market manipulation and then has the backbone to go in and enforce those rules.
So, Senator Warren, is your bigger issue that these types of trades were going on over the last couple of weeks?
All right, link will be in the description for that if you want to keep going. They also saw Trumpism. You saw a thing about Trumpism. I didn't get that video out. I didn't really like how I did it with the video, but they recently have been, since Trump has lost and been taken out of office, leading up to it, I want to say the beginning of the new year, they were talking about Trumpism and the lasting effect of what Trump's essentially populist movement going forward. And the conservatives, the disaffected liberals and things of that nature who are behind it, who want a more right-leaning populist movement, more free market populist movement. They're calling that Trumpism. They were already trying to say, where is it? They were already trying to say that, you know, this person even tried to equate it to GamerGate and said, well, they both started on, I keep clicking stuff. They both started on Reddit, you know, here. We read this earlier. Fucking unfuckable asshole or his bad behavior is your fault is the new take, but it's decidedly worse than the unfuckables are the same guys who ran GamerGate. This person correctly states how to conflate GamerGate and GameStop because both had the word game in it. And this person says how to understand both started on Reddit among incel types who decided to make a collaborative effort to fuck with people for more or less just because. GamerGate didn't start on Reddit. I can do a whole video on that. Maybe I will on this channel, but GamerGate didn't start on Reddit. Okay. GamerGate was discussed on Reddit, didn't start there. So, all right. let's see. Oh, and in regards to the Discord thing, apparently somebody put ASCII text, put the hate message or whatever in ASCII text, and that got by their bot and their bot moderation. They had damn near, I think, 100 or so, 500,000 people on their Discord server at one point. Yeah. You try moderating that in a short span of time and get things down as soon as they go up. That's not weird at all, though. That's not weird at all. I got another call, all right? Another person called me. I don't ever get calls until I start sitting down to record, all right? It's annoying. But I think that's pretty much it of what I wanted to cover, just the timeline of what was going on. I can't get too in depth about exactly how the market is going, exactly why these things are happening. I can give you the gist and basic understanding because I myself I'm learning as well. So, you know, I'm not going to try to get too into detail, but I can tell you more the culturally what's going on. They're saying, you know, that they want to regulate the trading and have more regulation, and it's very odd to me that they're doing this now where you see this, you know, market fluctuation and calling it market manipulation that the Redditors are doing. But, you know, for years when these hedge funds and things of that nature were doing it, it wasn't market manipulation, at least in their eyes. So, you know, I'm very wary when government says they're going to step in and just be like, to Dow, you know, how you like me now? No more game stonks for you. You know, stuff like that. I'm very wary of government intervention. You know, I always say, like, you rely on government to do anything, they're going to be a day late and $1 over budget. And, you know, also they're going to make sure that their people and their interests stay intact. Because, I mean, Elizabeth Warren made a bunch of money off of Tesla stock. She bought a bunch of Tesla stock before it was announced that they were going to move the federal fleet, or the new presidency, the new administration said they were going to move the federal fleet over to Tesla cars. So, you know, I'm very, very wary of stuff like that. And yeah, so links will be in the description. I will see you later. This has been DJ from the Culture War. Appreciate you guys listening. This has been a long one, going on 35, but I'm going to stop it a little short, and hopefully I can keep you guys updated going forward and build on top of this. I got a couple other works, pieces that I want to do, and more detailed, longer form, documentary style videos. So I want to practice on getting better at that as well. So if you're interested, like, comment, and subscribe. I am going to have my other stuff there. I got to upload to my BitChute and stuff like that. I'm going to do that manually probably today and tomorrow. I will be working on that, and just throughout the week, this week coming up, actually. So, yep. All right. Again, like, comment, and subscribe. I appreciate you guys. Appreciate the comments and people that have been, you know, watching. And I'll see you guys next time. This has been DJ from the Culture War. Second time's the charm. I'm out.